in Montana. And Terry Payne is our founder. And about 2 years ago, our region had grown to the #1 in our area. And so Marsh McLennan reached out and asked if they could acquire us. And Terry, being the individual businessman that he is, said that he would never sell, but also give him permission to change his mind. So we joined forces with a bunch of other independent agencies that all said they'd never sell, and here we are. And so we have a large footprint, but we're Montana homegrown and local. That's my spiel that they asked me to tell. All right. So how do you manage risk? I want to mention that this presentation is about typically an hour to an hour and a half long. So I'm going to kind of speed through and skip over a few things. Some of it may be applicable to you and your business, and other things you may be thinking how this doesn't really apply. I'll make time for questions at the end. But if you're looking at this picture, I would like you to answer the question to yourself of how you manage risk. Typically, I find that there are people that are way out on the ledge. That would be my husband. He'd be the one that would be out there on the corner. And then there's the guy in the bubble that's like nothing is getting through. I lean a little more towards that. That's why I work in risk management. But as we walk through the presentation today, we're going to talk about some strategies where there might be some potential middle ground. All right. So when I was a little girl, my dad would tell me as I headed out to the ski mountain, and yes, that's me in the picture, he would say to me, be careful out there. And I grew up in Red Lodge, and the ski mountain was my daycare. My mom worked at the mountain. And so as a little girl, that's where I got to go for daycare. And there was a little ski school program and what have you, but we had the little vests they would put on us and keep us in a group, and we'd get our snacks and we'd go out and we'd go ski for the day. So I look at this photo and I think, wow, they had everything all together. And then I think about it now as a mom, and I'm horrified. And I will tell you that some of you are sitting there and you know why. But for those of you who don't, do you see in the photo that I'm not wearing a helmet? I'm at the top of the mountain, ready to go down. I'm like ski jacket unzipped, and here we go. So now that I am in risk management, I can tell you at the end of the presentation how things are a little bit different, but the world has changed and how we manage risk has changed also. So kind of just a little analogy. So those of you who have teenage drivers, you might be working on driver education and potentially understand there's a lot going on. All right, so let's get into the meat of it. How do we define risk? This might seem like a very fundamental question, and of course we all know what risk is, but when you think about it, a lot of times we're thinking about risk in terms of what could go wrong. But the chance of loss or gain is really risk. So the piece about gain isn't often talked about. And as we walk through kind of formulating our plan and talking about what is risk management, I want you to be thinking about the gain. So the steps and the strategies that we take as we think about risk, why we do those things, and then what's the potential gain. Loss absolutely is part of that, but what is the gain? All right, so there are 3 types of risk: business risk, strategic risk, and hazard risk. Now, in your mind, I want you to think about when you're thinking of risk, most often, what do you think is thought about when it comes to risk? From the insurance standpoint, what we get asked about the most. Most of you are probably thinking hazard, and you would be correct, because that's oftentimes what is most thought about. So we're going to walk through each of these 3 types just briefly while we talk about next steps. So hazard risk. So these are the things that create harm or damage to humans, property, or the environment. I think many of us are all here from Montana, and so these headlines would not be a surprise to you. What might be surprising is that they're almost to the year, exactly a year apart, to the same exact community in our state. So Gardner has faced a lot of challenges: fire, floods. We've seen it all across Montana, from wind, hail to you name it. These are things that you can't plan for. Theft, vandalism, those are also some things that you would throw in there when you're thinking about hazards. Typically, these types of risks are covered through property insurance. Many of you know that, but it's those catastrophic, unexpected, unplanned things. Now, we're going to talk a little bit later about, while we can't plan for a hazard risk, what are some things that we can do to prepare in the event that it might happen. All right, so next type of risk is business risk. So it might surprise you, but hazard risk, the likelihood of your building burning down, is not the most likely cause of business failure in our country. It's business and also strategic risk, which we're going to talk about. And it's those risks that are associated with the internal day-to-day operation of the organization, things that could come up. When you're thinking about those, you're probably wondering, well, what could that potentially be? It could be something as simple as my employee clicked on a link while they were in the middle of doing an email. They're going fast and not thinking about it, and now I have a cyber incident. Business risk is all around us, and we're not going to go too deep in the weeds on this, but there's a few more examples as we kind of go through these next slides here. Workforce, your people, that's a business risk, right? Who you're hiring to work for you. Are you doing background checks? What is the type of training? What do they bring to the table? What does that look like from a team standpoint? That's a business risk. What happens if in the event that they get hurt? There's business risk there. We oftentimes hear about workers' comp or injury claims that happen maybe from the child care side of it, potentially lifting or picking up a child could cause a back injury. Just for a slight example. I typically have a list of a lot of different examples depending on the industry, but I'm not going to go into those too deep just because I know that you know your industry better than I do, but you can imagine the types of injuries that can occur. Supply chains and inflation. You know all too well right now what's happening in the market with industry, everything from purchasing food to feed those kiddos to supplies to Band-Aids, cost of insurance, costs of whether you lease or own your own building, energy costs, all of the things up and down the supply chain. This is a business risk, and business risk, when those numbers are out of whack in comparison to what you're able to charge in the market, that could price you out of business. So those are risks that we see is very important to pay attention to, as you know as well. Pause me if you have questions. I am happy to pause on a certain specific question. You can put in the chat, or Rhonda, you can pause me as well. Strategic and business risk, again, management liability. I'll pause on this just briefly. Typically, we see management liability coverage or D&O coverage for when you have a larger group managing it. But any business, whether you're one size firm with one employee and one business owner working out of your home, all the way up to a business with hundreds of employees and lots of officers, can have management liability. And what that means is there's decisions that you as an individual make regarding the business that you can be held responsible for if and when there is a potential loss. And so attorneys love to list everyone in a lawsuit that could be responsible. So the business name, the entity, and any officer or manager that might have been responsible for making decisioning. Management liability insurance does protect for that, but what we'll mostly be talking about today at the higher level is that is a risk. And so having a plan in place when it comes to risk management can help you make good decisioning, have good processes, and then enable your team to carry those out to protect yourself. Strategic risk, an example of strategic risk. Jason isn't on this call, but he loves to talk about the numbers. What do your financials say? And they tell a lot of the story historically. And so whether it's following a good budget, having a good process, looking at your margins in terms of what are you paying versus what are you charging, what can the market support for what you can charge per kiddo versus the expenses that you have going out, and what decisions do you have in between. Having good terms for whether it be your insurance or your loans with the bank, or even negotiating leases going into them. Those are all things that you can manage. There's things that come up that you can't always manage, but the financials tell a story, and working with your business advisor, such as Jason, to really understand what your plan is and how you can project for it. Cash flow, understanding cash flow, receivables, those parents that you just love them to pieces, you love their kids, but they just don't pay on time. Things like that. Those can be risks to your business if not managed well. Strategic risk, again, continuing and succession planning. I won't touch on this too much just because it's not as relevant in your industry. Typically, our childcare providers have their home-based or their family-based, or you have one or two owners. But perpetuation and succession planning can be part of managing the risk, and knowing going into the beginning of starting your business, how you plan to perpetuate it down the road. You would want to have the conversation about how you would exit your business when you open versus a year before you want to close. And that again is a topic that I would talk with Jason about. He's well versed in succession planning. Okay, when it comes to risk, and we talked about the different types, really you can narrow it down to we need to identify, prioritize, and quantify them. So this is how we analyze, separating it out into quadrants of low risk, medium risk, high risk, can help you, and then kind of working in a circle back to medium. Doing that exercise can be a healthy exercise no matter what size your business. You might identify that you're nearing the line in terms of the number of kiddos per adult ratio, and you're starting to get to that point and what you might need to do about it. Low risk for you if you are if you only have 5 kiddos in your center versus some of the larger ones, you might put that in that bucket because you are the primary. You would know your risk levels and how to assess them better, but it's a healthy exercise, and that's something I'd encourage you to do with Jason as well. And if you're a leader on this call and you're learning, you're on here more, so I understand some good approaches to working with those that you lead. I'm happy to get with you at another point in time as well, just to provide you with some tools. We do have some templates and some different things to help you walk through those exercises. Because again, this is more of a fundamental high level type of a class. So how has risk changed? We talked about that just briefly at the beginning, but this picture speaks 1,000 words. If you think about where in this particular industry is construction, where things have come and what the differences are now and how we manage risk. If you put that into your industry and think about all of the changes in regulation and what we can and can't do, and everything from rules about playground equipment to what we feed kiddos to safety and policies and procedures. We went from having 10 kids in a room and a child care provider could sit there and they could play all day and everything was fine. And I can tell you that because I was that kiddo in that room many years ago. And so it really has changed, and that's a good thing. We're managing risk better, and we're you all are taking great care of our kids. These aren't things you don't know because you have to do them already for your regulatory requirements, your licensing, what have you. These are hoops that you jump through and that you maintain high levels for already. But the conversation today is about piecing that out as to what are we doing, how are we doing it, what's our plan, and then how can we utilize the things that we're already doing to leverage access to things such as affordable insurance or other types of tools and resources that we might need to be effective in our business. So this slide has a lot on it. I can't even look at it in front of me on my screen because it's so little. But when you look at that, I just want you to take away that there are a lot of different types of risk out there. And so for you, as you build that quadrant of low, medium, and high, and you kind of make out your list of those things in your mind, don't just think about the things that could happen and go wrong. Think about what are the risks that we potentially take that we could result in some gain by investing in this fencing and putting in this playground equipment that is bolted down, and creating some more safety and security and walkways and pathways. We're going to be able to take better care of the kiddos we have, and by then also be able to attract more because we've invested in our infrastructure, things like that. So what are the risks? What are the risks we're taking? And then what is the potential gain or return on investment for that? So it's a loop that you would look to follow. Now, these risks out here, just kind of pointing out a few of them. Flood, we know that happens. So if you're in an area where that could potentially be prone to happening, then the risks of that would be then you'd have loss of business income. You might not be able to have the kiddos come if you've got a flood experience. That's a hazard risk. Looking at there from an employees or HR record management, some of that kind of stuff is kind of more on like the operational side of it, but those are small things that can add up. So if you hire an employee because you're desperate and you need to get someone in the door and you say, oh, I'll do the background check later. Well, what happens if then you do the background check after the fact and then there is something on there and you've already hired this person? So that can kind of turn into that HR business risk, where now you're in a position where you've got to terminate or potentially even worse, potentially put a kiddo at risk. Things like absenteeism, I think we're seeing that across many industries right now, where it's hard to find workforce. 2 employees get sick within the child care center. You've got, you work closely together and now you've got 4 employees are out sick. Well, the 10 kiddos that we need to take care of, they still need to be taken care of. So those are things that obviously come up. All right, we're kind of flying along here because it's already 1:49. So apologies for the rush here, but moving to the next piece is really kind of getting into the meat of it. So risk engineering, you hear risk management a lot, and that's only one piece of the overall response to risk. It's really risk engineering, and that's what you are all doing right now. It's setting your kiddos and your employees and your businesses up for success in terms of how do we make sure that we are well positioned to manage everything that comes at us each day. We want to start our business, grow our business, take care of kids, attract workforce, meet the requirements of the state, all of these things in one big bucket. And by the way, oh, what's for lunch today? It's lots going on. I know you all are doing it. Here you can see that the plan really falls into 6 categories for risk engineering, and that's management, which we're going to talk more about, mitigation, assuming risk, transfer of risk, avoid, and then finance. All right, so let's get into these. So risk management. What is risk management? I want you to just pause for a second and read the definition. I highlighted a few words there and I'm going to read it out loud. So risk management is the identification, evaluation, and prioritization of risks, which we've already defined today, followed by coordinated and economical application of resources to minimize, monitor, and control the profitability or impact of unfortunate events, or to maximize the realization of opportunities. So that long definition there is basically going back to what we said in the beginning, potential of loss or gain. And they have put together quite a long definition of it, but that's really what it is, potential for loss or gain, and how do we manage it? On the right there, you can see that photo, going back to what we talked about initially about identify, assess, your plan, monitor, measure, and then at the heart of it is risk management. We're going to get into that a little bit more, but it's more of an illustration of what we're talking about because sometimes people are a little bit more visual. I know I am. All right, so at the beginning, I showed you a picture of the woman out on the ledge and the man standing in the bubble. So really in the middle there, could there be a middle ground to that? When you're thinking about your plan, it's going to be unique to you and your company. You're likely already managing a plan that works well for you. I would encourage you just to think about, are you out on the ledge and are you under the bubble? And is it working for you? Because at the end of the day, if you can find a strategy to kind of find that common ground of we need to do business, we can't protect ourselves from everything, but what is the balance of being able to take care of kiddos, run our business, be profitable, meet the state guidelines, but also not truly be out on that ledge. Although for some of you, you might be like my husband and think that's the place you want to live. All right, so measure and control, going back to that piece we just kind of talked about briefly. I made this slide a little bit bigger with that image. So if that's something that you want to take out and piece out, you'll get copies of the slides. You can utilize that with your team to just have a conversation about how do we currently identify our risks? How do we assess and analyze them? What's our action plan for each area? How are we going to monitor and implement them? And then how do we measure and control? And then it's a cycle. And you just keep following that cycle. It is not a 1, 2, 3, we're done. It is an organic process that is a cycle. All right, so next piece, we were talking about managing. Next on the list is avoid. And I don't know about you, but I get a lot of spam calls. And truly, the only way to avoid the interaction is to not take the call. But you can't actually avoid the call from coming through? Can you? So can you truly avoid risk? The answer is yes, by not having a business. We can avoid risk by not having a business at all. We can avoid risk by not walking down the street, or by not taking the call, or by not doing something. But the fact is that we are in business. We are walking down the street and we are answering calls every day. And we don't know who's calling and we don't know what's going to happen. So the process of avoid, which was the man with the bubble, is typically not a plan that we see as successful, especially for entrepreneurs who want to grow and continue to take care of clients and customers. So kind of a little play off of the spam calls, but I get far too many of those. Okay, so mitigate. Here's an area where I would encourage you to just really take some time with your team, your business advisor, those that you're advising, and talk about mitigation. Because while you have in place a plan right now that meets state requirements, you're licensed, I'm assuming most of you are, or that your clients are, there's always ways that you can look at how can we better mitigate risk. Now, the warning sign here, dog on premises, that's not going to necessarily stop someone from coming in and interacting with the dog 100%. But it's likely going to cut down on a large percentage of people that would. And so you're not stopping it from happening, and you're not stopping liability from being in place if it does, but you are going out of your way to take a step to say, hey, there's dogs on premises. Now, likely there's not any dogs in your childcare facilities, but let's say you have neighbors and occupancy next to you in the area that might, and you have kiddos, and the kiddos are all in fenced areas, but you go on a walk to the park regularly. And maybe there's a property that has dogs. Reaching out and having a conversation about potential signage that could help tell those kiddos, hey, there's dogs on the premises. That's a conversation, and it costs you nothing to have that. As you'll see in the picture there, there's fencing around the playground equipment. Insurance carriers, underwriters love fencing. They love fencing because it keeps kiddos in and it keeps dogs and other people out for the most part. Photos go a long way. So just marking on an application that you have fencing, go ahead and snap a photo of that and attach it with it. It can really help you cut back on the time it takes to get your quotes back. I'll show in the top corner there that little faucet. I point that out because mitigation can slow the drain on funding. The total cost of risk, losses, and things that happen, the things that you invest on the front end, such as fencing, can save you money. It can save you from having a loss, and it can also save you in premium, because those are things that carriers like to see. They're underwriting the risk, and when they see that you're putting in the effort to have things in place, they are happy to see that. Many of you have requirements for your licensing too, but this was one that I thought was applicable for an illustration. All right, next is assume the risk. So we assume the risk by being in business. All the things that happen every day are occurring, but there are ways that you can think about it when you're in your day-to-day activities with your employees and training, and things that we don't necessarily need to do. So things like serving grapes and hot dogs at lunch. That's assuming a risk that isn't necessary. When you're changing a menu in a quick rush because there was out of a product, still thinking about those things so that you're not assuming that risk. Running tight on cash flow because we haven't, collected receivables. That's assuming risk. There's lots of different areas in business to assume risk. I'm a hiker. I'm a mountain girl. We go out in the mountains, and if I'm going out and I don't take my bear spray, I'm assuming some risk. Now, I'm not going to avoid the bear, but I'm assuming some risk if I decide not to take my bear spray. And we don't need to have a political talk about bear spray versus guns. And had all kinds of opinions on that when I've used this analogy. So not trying to tell you which route to go, but take something with you is all I'm saying. This is from a girl that grew up in Red Lodge near a lot of bears. So there's your extra tip of the day. All right, transfer. So this may come into play, especially if you are a larger facility or if you're in leadership that is managing multiple facilities. Transfer of risk in a contract, you can transfer the indemnification to the other party in different ways. I'm not going to get into contracts. Hopefully don't have any lawyers on the phone. I'm not giving you or on the Zoom. I'm not giving you legal advice. But I will tell you that if you are signing contracts or you're looking to sign contracts, I work in large commercial mostly, and my clients send me contracts all the time. We review the language, we look at what does it say, what does it not say, who's responsible for what, and where's the coverage, and then making sure that it's in place, because this is an area where you can get caught up. I would encourage you, if you have a new client or an opportunity to do an event or something to where you're going to be doing childcare, and it's through a contract, you want to have your attorney, your CPA, and your insurance advisor look over those for you. All right, we get to the last piece. Imagine I would talk about insurance last, but the last way that you can, in your risk plan, is you can finance ways to cover your risk. And so that's insurance. And so it's required at the state and regulatory level from a licensing standpoint. And then also it protects you and your business so that it can continue in the event of a loss. And so you can insure for hazard, business, and strategic risk. And there's different areas for that. And I am going to show you a sample here in a minute. But that's the most I'm going to tell you about, just the financing piece. And then I'm going to give you some examples here. I get asked on almost every presentation that I do on insurance of what's happening in the market. Why are costs going up? Why is it hard to get insurance? And why can't I find affordable insurance? Well, the answer is that we are literally in what's called a hard or firming market. And as you know, childcare providers have faced this long before other industries have. It's always been hard for you. It's now even harder because your peers and other colleagues in different industries are also seeing this. And so what's happening is capacity is shrinking, pricing is going up. And so what I mean by capacity is shrinking is it's harder to get coverage and the cost is higher and the requirements around getting it. And why is that? It is literally simple math. When premiums do not outweigh losses, you start to see a gap. And the reinsurance companies, so insurance companies go out and get what's called reinsurance. The reinsurance market tells the carriers, no, you have to cut back on your book when it comes to this industry. No, we're not going to insure you for this. And so that's why it gets harder. I won't go into great detail. If you ever want to have a longer conversation about the hard market, feel free to reach out. I'm going to kind of speed up a little bit because we're running short on time. Our team works on top of stack submissions. We help with loss control and prevention team. We have a team that'll actually come out and do site visits and work with that, help with capacity and cost containment strategies. And then carrier partnerships matter. We do have a carrier partner direct that loves childcare. They have a 95% placement rate. I'm not going to tell you who it is on the call, but if you reach out to my team, we'll certainly connect you and help you with that. I have looked into them myself, and I'm very picky about the carriers that I work with, but they do a great job. A lot of times if you're going to a smaller agency or some of these agencies, they're working through what's called a broker. And so then you have a layer and then they go to another carrier. And so then you've got these layers in between and lack of communication, and it just becomes challenging. And so if you're working with a partner who is literally in direct contact with your underwriter, you're going to see better results. All right, so this is a sample program placement of how we work with our companies of all sizes. I've got a whole team that works on these, and depending on the size of the companies that we serve, they work with different individuals depending on the scope of your needs. But we typically review current policies and coverages. We look at placement, cost containment strategies, go to market, and then really stewardship, making sure that you have an understanding of what you have, what you need and what you don't need. Property and casualty, I'm not going to go through that list, but that's a list of all of the different things. We do workers' compensation, compliance, risk management, communication, and guidance. I tell my clients that we are here to be your thinking partners and to help you with the things that you don't necessarily think about, to best protect you, to bridge the gap between the perception of risk and true preparedness, which starts with understanding what are the risks, and then identifying what are the things that we already have in place, what are the gaps, what's the potential plan that we could put in place to augment. And then at the end of the day, I am in the insurance industry, so then we look at the overall insurance program. It's a sample plan that we put together for childcare facilities, everything from workers' comp, abuse coverage, professional liability, educators legal if that's applicable, and then property and what have you. I'm not going to go into these in great detail because I'll put you to sleep. I geek out over it, but what I really want to leave you with today is that things change. And as my dad would say, be careful out there. And that is my little girl in the picture with her and I at the top of Lazy M. Now with helmets, things can change. Her coat is zipped and we're ready to go. And as you can see, the sign has also changed since many years ago. But your business is changing every day, and the needs of your kiddos and the things that you're facing are changing too. And my team would be happy to make ourselves available to help you in any way that we can. Jason has a lot of resources and access to me direct to provide him with tools. So as he's advising, he can provide that when it comes to putting together what we call a top of stack submission to access the coverages that you need. And even if you have an agent that you're already working with and you're happy with, that's okay too. We're still going to provide that information to Jason because we, at the end of the day, want our childcare providers who are so near and dear to our state and the workers and the companies that thrive here. And so that is our willingness to do that for Rhonda and Jason. This is me and Abby Wink. She is in our benefits. That's our contact info. I mostly put that on there because you're going to get the slides if you want to reach out. And that is all I have. There is your summary, and it's back to Rhonda unless we have questions.
Awesome. That was great. Thanks so much, Dena. And just for all of you to know, hopefully most of you filled out the insurance survey that we sent out. We know, insurance is a concern right now, especially for family and group providers. So we've had some discussion with Dena on what we can maybe help do to solve that and make it a little bit easier for providers. But it starts with good risk management in your programs, with your policies, your procedures, all of that. So we will definitely have more to come on that, hopefully more training about that. But for today, thanks for hanging in there. I know we're over, but we could probably talk about risk management for days. So make sure I will send out the link for the survey. This is the next series for Tiny Trainings, kind of a how-to series for our next quarter of trainings. So look into that if you're interested. And then, like Dena said, again, we'll send out the slides. They'll be posted on the website. So there's our contact information. Follow us for information. Always trying to get stuff out there. And hopefully the resource hub will launch mid-April. So by the time our next series starts up, the resource hub should be launching with some more resources and stuff. So thanks for joining, everyone. We appreciate it, and hopefully we'll see you in a couple of weeks to kick off our how-to series. So thanks again, Dena. That was fabulous.
Thanks, Rhonda. Thank you, everyone. Have a great week.
Thanks, everyone.